Our job begins where most advisors stop. Saving money is great, but how do you spend it without risk in retirement? Welcome to Every Day is Saturday with Brad Gotto and Matt Stahl, partners and private wealth managers at Fiat Wealth Management. In this podcast, we aim to broaden your knowledge about the financial world we live in today and make the boring and complex financial decisions fun, informative, and educational. Join us on this journey where Brad and Matt will explore different strategies on how to spend your money without guilt and have peace of mind knowing you are spending it the optimal way in retirement.
Hello, everybody. Welcome back to Every Day is Saturday. I am Matt Stahl, partner with Fiat Wealth Management. I'm here with my partner, Brad Gotto, and we are extremely excited to have a special guest with us today, Chad Mason, CEO of Cabana Group.
Hey, guys. Thank you for having me. And I love it that it's Saturday. I felt like a Monday all day today.
Awesome. Well, Chad, we've known you for a while. Not everyone on here is going to know you. So let's start from the beginning. Just tell us a story. Tell us about yourself, where you're from, how you got to doing what you're doing.
Yeah. All right. I'll try and make it brief. So started out my adult life as a lawyer, kind of a street lawyer, doing all sorts of things you might imagine that would be associated with chasing ambulances and doing divorce cases and all that good stuff. So I spent my 20s doing that throughout the 90s up until the late 90s. And an interesting sort of thing happened in my life that turned out to be fortuitous at the time. It was not such a good thing. My grandfather, who was sort of a hero of mine, from South Arkansas, and he started out life as a plumber, literally living on dirt roads in South Arkansas. Didn't come from money. Spent all my summers down there with him and my grandmother. And he had sold his business in the early 80s. And I'd watched him sort of learn about investing and investing his money at that point with Fidelity mutual funds when those first came out in the 80s. And I kind of watched from afar and talked to him a little bit about it. But long story short, he passed away in 1997. My grandmother passed away 11 months later. I ended up probating those estates and didn't know really much about investing, if anything, other than the time I'd spent with him and just a general idea of what it would involve. And a large bank and trust company came to my mother and suggested that they would be able to manage his trust and manage this money and, watch my mother kind of trust them with that money. And they turned it over and fast forward to 2002, the tech bubble had occurred and my mom called me and this particular bank and financial advisors had lost or the account was down more than 50%. There was, thinking back on it, I think probably more upset because she felt like she had let her father down than anything else. But long story short, I went to sort of get to the bottom of what had happened. And in doing that, I realized that maybe the industry wasn't quite what it should be, at least in my view. And that, I was told repeatedly that when markets fall 50 or 60%, like it occurred between 2000 and 2002, that's just what happened. You lost your money and they hoped you would stay invested and eventually it would come back. And so an interesting thing was happening in my life at that time. I was involved in a very large accident case out in North Carolina. I had some clients who were very seriously injured at a NASCAR, the Lowe's Motor Speedway, where they run NASCAR races out in Charlotte. They had left the stadium after the race and a pedestrian bridge between the stadium and a parking lot collapsed. And they were on that bridge and were really seriously injured. And that case was going to trial at the beginning of 2003. So when my mom was talking to me and I was sort of delving into what had occurred with my granddad's estate in the spring of 2002, I was aware that I was going to be involved in this litigation. And I thought there was a pretty good chance my case would settle. Had one of the first cases filed and I thought the case would settle in mediation. So after learning what I'd learned about how investing worked, I really felt like I was certainly not going to trust my money to this industry just based on what I just seen. That it just made no sense to me as a lawyer. And I guess you have to kind of understand, being a lawyer, you're paid to be proactive. You're paid to do something. So this idea of just watching, your money just vanish or go away, so to speak, in a market like we saw between 2000 and 2002 was very foreign to me. And so I really just at that point made a decision, in the spring of 2002, to the extent possible, I was going to refocus my life and my career and learn as much as I could about the investing process. And, that I wanted to, if I couldn't trust the industry or these types of people who seemed to be as reputable as you could get, then I was going to have to do it myself. So long story short, that's what we did. And, between 2002 and 2005, really began learning everything I could certainly learn about investing, beginning with the book Investing for Dummies. Went to Barnes and Noble, the yellow book, and that was my first book, learning the difference between a stock and a bond and an exchange and a market maker and all the just sort of the nuts and bolts of investing, all the way to about 2005. I graduated to really looking at risk management and trying to figure out why it was that nobody sort of insured a portfolio like we do our house or our car or our life. And so really got involved in risk management, that side of constructing a portfolio with defined risk metrics in place. I spent a lot of time reading math books and option strategies, looking to, sort of implement those to control risk, almost like insurance, which was pretty familiar with to me, just based on my career. So 2006 launched our first fund, and that evolved over time to becoming a state registered advisor. And then by the mid to late 2000s, that practice had really grown. We'd made it through the financial crisis and implemented these strategies and worked with clients and started to grow. And it just evolved from there. About 2000, late 2015, we made a decision, my partner and I, Louis Schaff, to sort of take these portfolios public and begin the process of distributing these to advisors around the country. We've now wrapped these in ETF or exchange traded funds structures, which are quite efficient, allow for some real tax benefits. And so we spend much of our time now just working with partners like you guys around the country, building product and portfolio solutions that make sense to you and your clients. And hopefully, my goal is to get as many people involved in this great world of investing and change lives. So that's a very short synopsis, and happy to provide more color if you think it's important.
Yeah, perfect. Well, yeah, just to back up a little bit. So we often describe what we do to clients as general contractors, and we go out and find the best subcontractors for each area. And Chad and his team at Cabana act as one of those subcontractors for us when it comes to the investment world. And one thing that really stuck out to us was your story. So what you just explained, and there's much more to that story. So if we have the time, I'd love to dig into continuing that story about your pool house and all those good things.
Yeah.
And the very beginnings. You have a specific algorithm that you use that has a particular name. So if you could talk about that a little bit, that'd be great.
Yeah. So, we call our algorithm CARA, which stands for Cyclical Asset Reallocation Algorithm. An algorithm is just a fancy word for, a software program that's doing some sort of analytics for us. In our case, this software program evaluates kind of where we are in the repeating business cycle, and we allocate to asset classes in the very broadest sense that perform relatively well at that point in the cycle. And then we hedge with non-correlated or inversely correlated asset classes, depending upon the risk parameter, what we call the target drawdown of the portfolio. So I like to say that CARA, which is our algorithm, she has no bad habits. She doesn't smoke cigarettes. She doesn't drink, and she doesn't even sleep. She works. She doesn't have any bad personal relationships. She just works 24/7. So CARA is constantly, pulling in some fundamental and technical data that reflect the business cycle, and we're aggregating that data in real time, and then we're allocating our clients' portfolios to those asset classes again that perform relatively well at that point in the cycle. And then, we try and keep it really simple in that we do hedge with other asset classes. In the event that we're wrong or things change, we want to be able to cushion or maintain that drawdown. And so we use other asset classes to do that, understanding that at the end of the day, it's a zero-sum game. When money leaves one asset class, it's got to, by definition, go to one of the other ones. And so, that's in its most simple terms what we do. It's based on some really time proven financial theories and ideas. We're big followers of what's called modern portfolio theory. Harry Markowitz in 1952 really sort of was the father of that idea of if you can avoid large losses and protect against volatility by using a variety of asset classes, then over time you can produce excess returns. So that's sort of the school of thought that we're big believers in. We do have some sort of a twist on that in that we apply it dynamically. But 2 Nobel Prizes have been awarded on this type of investing and why it makes sense over time. So we really don't try and outsmart anybody. We take advantage of a lot of that study and a lot of that, the math that's been done with that, and apply it in sort of perhaps a novel way and get it out to investors in a way that resonates with them. Again, with the idea that we really want to get people involved in what I think is the ultimate equal opportunity sort of playing field in the world, which is investing. So that's what we're about first and foremost. The way we got here is certainly unusual, and just talking about my pool house and Dr. Covington, who was the first engineer that I hired to help me with coding and actually building a hardware platform that could even run our first software back in the early 2000s. My uncle, who's a statistician, helped us for actually about 18 months. He came and lived with me to help us build the first database. So it's been a long, a long process, and it's interesting to think back on where we started and why. But at the end of the day, it was really to do it a better way, a way that made sense to me. I was talking to you guys earlier today. I literally was my first client. My mother and I were our first clients, and everything that you see today was built, with what we wanted, what we thought made sense, what we wanted to see in an investment or a portfolio solution. So it's been a real advantage in some ways, and in some ways it's been a disadvantage not coming originally from this industry. We didn't know what we couldn't do or what we weren't supposed to do. So in that way, we were able to sort of approach things with really fresh eyes. And again, I think it's the proof's in the pudding. We've been really successful, not because I think we're the smartest people in the world or even try to be. It's just that, we really build things in a way that people understand. It resonates with the things they're most concerned about, which is really how much might I lose when things get ugly. All of our portfolios are really unique in that we label that drawdown numerically. So, if you're in our target drawdown 10 core portfolio, you understand that portfolio is designed to drop up to 10% in a relatively bad market before we remove the beta. If you're in our 13, it's designed to drop 13. If you're in our 7, it's designed to drop 7. We don't guarantee anything. I can't promise you the sun's going to rise tomorrow, but at least people know what the intended risk is in the portfolio in terms that, that matter to them, which is how much money might I lose from top to bottom, before things turn around. So again, that's where we sort of came from. And that's what we're trying to accomplish. Again, trying to keep it simple, keep people invested, get people invested, avoid large losses, and keep people invested. If we can do those, 3 simple, basic things, then we can change lives.
Yeah, I think what's interesting, Chad, about your story is whether it's, financial related stuff, and we're talking portfolio builds, or you're talking the idea of buying a car, or building a home, or just anything else that we do or that we buy, that the best products out there in any industry, in my opinion, are the ones that are built by a consumer that saw a need and tried to meet a need, right? Where they understood the problem because they experienced the problem in their own life, and then they go out and they try to fix the problem. They end up being the most practical, best products that we have, instead of it being the other way around, where you've got a big corporation that thinks that the average consumer has a problem and then tries to solve it from, their glass buildings, so to speak. You can just always kind of get that feel that it was built with the consumer in mind, but they're not the end user. And so the experience isn't what you would expect. It's not exactly what you would want. And at the end of the day, that's your story, right? You saw a need in your own personal family. You were client number 1, mom was client number 2, and built it based on what your family needed. And ultimately, what you found through your success tells you everything most people want, right? We just got done having this conversation about risk and reward prior to this podcast. And anytime you put your money in harm's way, it can be pretty stressful. And in the past, it's just, we've never been able to quantify what that harm is, and nobody really understood it, or most people even today probably don't understand it. But we all want the other side of it.
I think you're spot on. It's funny, thinking back on what you just described. I think that's true. certainly of what we're, all of us on this podcast are trying to accomplish today, but it's true of other industries as well. Solving a problem that was in front of you is really a huge advantage. Doing it on your own and thinking through it and failing and succeeding and failing and succeeding. That's all those iterations, that process is just so invaluable. It's probably the greatest advantage we ever had, was that we did it from scratch, and we didn't have someone telling us, oh, you shouldn't do it that way, or you can't do it that way. And so that's a huge advantage. I can tell you it also, we ran into a lot of walls, when you start trying to enter into this industry. You got lots of gates and a lot of people out there, who are protecting their turf and what they're trying to do. And, you think just because you build something that makes sense to you and works, that it's just going to take off. And there was many, many years where I really felt like we were shouting in a cave. So, there's two sides to it. But I do think you're spot on. I think the best products that have ever been built, have been built by people to solve a specific problem that they were familiar with and they were passionate about for some reason. So yeah, I'm with you on that. As far as risk and reward, that's another really interesting sort of psychological dynamic that involves investing. Everyone is looking for the greatest reward or yield, if you want to use the colloquialism in our industry. Everybody's chasing yield all the time, but it's always relative to one thing, which is risk. How much money might I lose in this endeavor? And so we really try and go out there and put that at the forefront of everything that we provide downstream clients, so they can address that issue first. They know what the intended risk is, and so that's just that's an important, to me, just critical part of investing as it should be. That's one of the things we talk about in a lot of our collateral, is just investing as it should be. You should know what you're getting into in terms that you can understand and that matter to you when you're looking at any investment. And so we really have done I think a great job of putting that out there and being accountable. And I think the reason that, and again, this is my opinion, so take it for what it's worth. It's my opinion that a lot of investments that you see out there, and then traditionally the way the industry's handled this, is they don't want to be accountable. They want to be able to explain it away. Well, that's not really what I meant, or this happened or that happened. Or that was that, and I just think that's not the way you should do things. Doesn't mean you're always going to be right. Doesn't mean you're going to be perfect. You're going to make mistakes, but you ought to at least put your money where your mouth is and be accountable. If I'm going to be brave enough to get paid to build these portfolios and put people's hard-earned money to work, then I should be brave enough to be accountable and be held my feet held to the fire. So that's just what we're about at Cabana. Again, doesn't mean we're perfect or the best, but we certainly try and be transparent and do things in ways that make sense to the vast majority of people out there.
Well, something's working, because what you guys were named, weren't you named was it the fastest growing RA? When was that?
Yeah, in 2018, we were the fastest in the country. In 2019, we were second. 2020, I think we were, I don't know, maybe around 20 or so. I think this next year, we may be back in the top 10, or maybe even one or two again. It gets harder the more money you have under management, I'll tell you that. But yeah, again, what we do is just, it's pretty simple. To me, it's just the way things should be done. And it obviously has resonated with a lot of people and partners like you guys, who are fiduciaries, who are out there really putting their clients' best interests in front of everything. Those are the people, those are all my partners, are all fiduciaries, so yeah, I just have seen that it makes a lot of sense.
Well, and I think for us in our conversations, Chad, it's been the ability to be able to reconnect people back to their money, right? I talk about this a lot, where on the earning side of things, right, where we all go to earn our monies, whatever our day jobs are, or if we're retired, whatever we did in our previous life, to be able to have the money we have today to be able to be retired on. There's that friction of earnings versus what you did to earn it, right? You can feel it. And so there's always you're able to judge your career, job, or whatever by the earnings and go, well, look, this was worth it, or it wasn't worth it. I need to find a new job. I'm underpaid. I'm overpaid. And so you've got this dynamic where it's like, I can feel, and I have this direct connection between how I earn money and what I actually earn for it. there's this disconnect with the other side of that, the spending side or the investing side. And a lot of times I feel like the average lay investor puts their money in the market and they're just disconnected from it because they don't understand it. They know they hope to make money, but I feel like a lot of the people that we talk to they're doing it because everybody else is doing it. They know that it's the right thing to do, but we just don't really know why or how it works or what their expectations should be. Right. And so one of the things I love the most about what you guys are doing at Cabana is you actually had the goal to put expectations, not just in behind the scenes of what your own expectations are. Because I think every money manager has their own expectations of what they should and should not be doing on behalf of their clients, but to be able to actually tell their clients, this is what we expect of ourselves and judge us by this, i.e., here's what you should expect the portfolio to do when the markets pull back. It brings back a connection to people's money. And for the primary people that we work with that are in that retirement crowd, all the other fears that can go around this idea of I'm not earning a paycheck anymore. I have to live off of this pile of money. I don't know how to do that. I've never done this. I don't like watching the pile go down. We were talking a lot about behavioral finance before this podcast started. And, especially for the last 12 years, think about the people who are retiring today. They're 60, 65, and the market hasn't gone down in any real long extended sense for 12 years. And we've had some blips, but for the most part, they've done is watch their pile get bigger and bigger and bigger because they're putting money into it and the market's been going up. And so the idea of watching it go backwards is tough. And a lot of people, because of that, won't spend their money. It's really hard to get them to spend their money. In fact, I had a client email me last week, Chad, you'll appreciate this. Long email. We're, in the whole beginning of the email, we're going through like what needs to happen before the end of the year, a lot of RMD planning, some qualified charitable distribution planning going on. And the PS at the end of this long email was, I never thought it would be so hard to spend my money. And the complexities that go with it. And what you've done at Cabana kind of simplifies one of the big unknowns out there of, I don't know what to expect when the proverbial, what hits the fan. And because of that, I'm going to freeze and do nothing or not spend my money or have anxiety or all these things that nobody wants. Right.
Yeah. I mean, that's a really, an interesting thought and one that I haven't really personally focused on, but I think it's really well said. You work your whole life. My granddad, I'll just give you an example of just somebody we were talking about, just how hard he worked, for that money, how many houses he crawled under and the plumbing problems he fixed over 40 years. At the end of his life, you're right. I can remember, my grandmother being worried that, she had enough money to have the yard mowed. I mean, part of that's, she grew up in the Depression and grew up really, really poor. But your point is really well taken, that everybody works really hard and you should enjoy your life. Why are we working if not to, spend time with our kids or our grandkids or travel or, do something special with our wife or our family. And so, yeah, I think that's a great point. I always focus on, getting people invested because I just believe so passionately in the opportunity it provides everyday people to participate in, human evolution and the growth of this of America, which, despite all of its problems, is still, the greatest country in the world, right? To be able to participate in that, to me, is just such an important thing for everybody. So I always am focusing on that, but the rules-based nature of what we do and, setting expectations, getting people involved in something that they can be comfortable with does sort of free them up on the backside. It's something I haven't really thought about, but I do get what you're saying. And it's an important element. If people do have a system that they can, believe in and have an expectation as to how it's going to perform, it does let them live. And that's great. That's really well said. And that's an important concept. So thanks for adding that.
Brad, what do we do in 10 words or less?
We teach people how to spend their money.
I mean, I haven't had anybody put it quite that way, but I mean, that's the way it should be. I mean, right? I mean, why are we doing this? Why are people, living and dying to save and work for their for their families and themselves? I mean, if not to take advantage of it at the end of the day, or even why have to wait to the end of the day? Even better, So that's great. I like that. I'm going to borrow that.
Well, it goes even further. We actually say we teach people how to party.
Well, I'm definitely going to borrow that. So thank you. That's right. That's right. It means something different to everybody.
But the real cool thing is and you telling your story and how, you felt like you're coming in from the outside, our message stands apart from most other firms. Most of the firms are not leading with, hey, come over here. We're going to teach you how to enjoy your money, and spend your money. So we appreciate it more than, your background not being in the traditional financial services industry, and overlaying your story on top of ours. It makes complete sense. And that's why, we've been extremely happy.
Yeah. I mean, it's been a great partnership. You guys do amazing stuff. Brad and Matt have a bunch of guys and ladies in here who are also advisors. And I was just talking to them about, we've got hundreds of advisors around the country, who are partners and that we work with, but you guys really do it differently, and you are thinking outside the box, and I love it. It makes us better. Just me getting to do this, just having this conversation, helps me build better products and helps me, build better messaging. Our marketing and communications department is always looking to how do we explain this in a way that's more concise and why it's important. And just like you just said, that's a concept of, learning how to spend your money and what it takes to feel comfortable enough to do that. That's a message in and of itself about how we build portfolios and why we build them. So anyway, great to be here is the bottom line. You guys are doing it right.
Well, we appreciate you telling a little bit of your personal story, a little bit about how you're getting done, what you're getting done over at Cabana as far as kind of the technical stuff is concerned. One of the things we like to do when we have guests, Chad, is when we get kind of towards the end of the podcast here.
All right, let's go.
Skip it. Ask 5 fun questions. Just that have nothing to do with, and you're not going to have any idea where they're going to come from, but we're going to fire 5 quick questions at you, have a little fun with you before we shut this podcast down for today anyway. And so with that said, I'll start, if you don't mind, Matt, and ask the first question. What was the biggest challenge you found switching from law to the financial world, looking back, the hardest part of that process?
I think that the hardest thing for me, and it was probably just my own ego, was that it took me 5 years or more before people, I think, trusted me with this type of decision making. I'm from a relatively small town, Northwest Arkansas. I was very, I was very active as a litigation lawyer. I was well known. I'd had some success, and I think there was, a lot of sort of shock. Like, you're going to do what? You're going to, in the middle of your, career and your early 30s, you're going to go back. I actually went back and got my LLM, which is an advanced law degree in financial services and wealth management. And you're going to learn about investing, and you're going to build portfolios, and you're going to launch ETFs. I mean, I think that, and that was frustrating to me because, maybe people didn't appreciate my passion for it or why I, believe so strongly in what I was doing. So I think that was frustrating. That's probably the hardest thing for me, psychologically, certainly financially, doing all the things that we do with, getting, GIPS compliant, which just means that you're meeting the gold standard and outside third-party auditing of your portfolios, your performance, your process, your protocol, all of those things, the regulation, hiring compliance officers, was very expensive. I mean, and you look back going, man, I can't believe I was able to do that. But then all of a sudden, 15 years later, you're here. So financially, it was tough. My wife was such a huge support for me. I mean, she was like, I believe in you, baby, go do it. And I think there's times when she saw me laying in bed for months reading math books, she probably scratched her head, but she never once wavered. And, I had young kids and she believed in me. So, I got through it, but I think that was the hardest thing. Just people in my community that knew me a certain way, and they didn't perhaps respect what I was doing here in the way they had, what I'd done as a lawyer. I think that was hard for me.
All right. I'm going to take it personal, and I'm hoping that you're okay with me sharing that you're a new grandparent.
My oldest daughter, Georgia, just had a baby August 12th. I have a little granddaughter, Calhoun Caroline Searcy is her name. She goes by Cal. And that's been an amazing, well, I mean, anybody that's had their first grandchild is just, it's a mind-blowing experience. So yeah, thanks for asking. And I wish I could show everybody the pictures because I've got about 15 on my phone, but you know how that goes.
What's the number one? What's the number one thing you've learned from that?
I think, and I'm still, it's so new to me but I haven't fully learned it, but I can feel it, if that makes sense. I think maybe just a little more patience. And I'm not sure that, that immediately, resonates with people, or they equate to having a grandbaby and patience, but just something about, your baby having a baby and watching her, my daughter, becoming this mother and this, incredible person that she always was, but now this new evolution, and me just sort of stepping back a little bit, being removed. When you're a grandparent, suddenly you're a little bit removed. I think that it gives you some perspective, which to me, I just feel a little bit more patient about things. And I'm not fully, I don't think it's fully hit me yet, but that would be the best word I could describe the past few months, is just that evolution of patience.
What is the best concert you've ever been to?
So both of them occurred at the Jazz Fest in New Orleans, which my wife and I have gone to for more than 20 years. I saw Santana, who I was never a huge Santana fan, but I saw them right after their album Supernatural came out. So what is that? Maybe 2004-ish. And it was absolutely mind blowing. It was just, they were so good. I mean, they had these kids playing, 45 different bongo drums and percussion stuff and crazy. They were just incredible. So that's probably the best concert I've ever seen, but I wasn't a huge Santana fan. But even with that said, it just blew me away. And then the second one, was just incredible. I saw the Eagles about 8 or 10 years ago, also at Jazz Fest with their full ensemble. And they were just, I'm a huge Eagles fan. If I had one band to listen to probably on a desert island for the rest of my life, it would probably be the Eagles. So those two are at the top. I'd throw in the Allman Brothers and the Rolling Stones, behind those.
All right, this is an easy one. You're a well-read guy. What's your favorite book?
All right, I'm going to say Tom Sawyer, which is, I know it's just a giveaway, but I mean, if you ask me, if I had to read a book 5 times, it would be Tom Sawyer. There's a financial book that a client gave to me that you can read in about a night and a half that was transformative to me in a really unique way. It's a famous book that I just gave my son. Rich Dad, Poor Dad is the name of that book. So 2 very, very different books.
Okay, last question. Now, Matt already gave away the fact that you're a grandfather, so I don't feel like I'm out of bounds saying that you also just recently had your 54th birthday, correct?
That's right. I'm now officially an old man. I'm AARP. I get all that stuff in the mail, which really shocks me, man.
So for some people, I would say fast forward 20 years and tell me, what your life looks like. I'm going to go a little shorter because who knows if you're still be alive then. Okay, let's do it. So what's Chad Mason doing at 74 years old?
I can tell you this because, if there's anything I know about myself is I will be working. I just cannot not work. So it's probably a flaw in my character in some ways. I spend too much time doing that. And I think I will always be working, and I just can't think of a job I like more than the one I'm doing now. I'm just as passionate about investing and building portfolios and coming up with solutions and ways to do things now as I was 20 years ago when I started it. And I mean that. It's almost like sports investing. I was an athlete growing up, and I love sports. Investing is the ultimate sport, and it's a challenge every day. You don't ever solve it. You try and continue to get better. So it has all those components. It's a lot like law too, in that, when I got a case, it was very analytical. There was a lot of pattern recognition and, way things work together. And that's very much, consistent with the way we build portfolios. So, everything that we do today is similar in some ways to things I've done in the past. And I imagine I'll be doing the same thing 20 years from now. At least I hope I am. If you're not working, it's just hard if you're not doing something you're passionate about, you're just not living. So to me at this point, I'm passionate about what I'm doing. So I think that's what I'll be doing. We'll see.
Chad, Matt and I really appreciate your time. We appreciate the partnership you have with our firm here at Fiat. One of the things that it probably is more ingrained in us every single day is how important it is to have really good partners to take care of the families that we serve, because we can't do it on our own. And at the end of the day, kind of as their CFO, as we like to fancy ourselves, there's a lot that goes into it. Some of it's behavioral, some of it's financial, but at the end of the day, we just know we can't do it on our own. And so we greatly appreciate the partnership with your firm the last couple of years. We appreciate the time that you've given us, the access you've given us to ask all the good questions and all the dumb questions to make sure that the families that we serve are getting exactly what they're after. So thanks for being with us today. We greatly appreciate it. Sharing a little bit of your story, because that's really what matters. And hopefully we can do it again sometime soon.
Hey, for sure. Thank you guys so much for having me up here. What a beautiful part of the country. I've never, still Matt said, I haven't spent much time up here before. And it's, I mean, you know, maybe it's just today, but it's just a gorgeous day and it's fall, and what a beautiful place you guys live. And again, I wasn't just blowing smoke at you. You guys do things the right way, and I appreciate you. I mean, I wouldn't be here without you. So
it is beautiful, but you don't have to pay the taxes. So
I mean, yeah, we got those same deals in Arkansas too, man. So,
all right, everybody. As always, thank you so much for listening to Every Day is Saturday. If you want to reach out to us here at Fiat, our website is going to give you all of the information that you need, and you can find that at www.fiatwm.com. Please subscribe to the podcast if you've not done so already. We don't want you to miss an episode, and we would absolutely love it if you would share it with your friends and your loved ones. I'm Brad Gotto. I'm here with my partner, Matt Stahl, and our guest today, Chad Mason. Thank you for joining us, and we will see all of you next Saturday.
Thank you for listening to Every Day is Saturday. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Fiat Wealth Management or Foundation's investment advisors. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC registered investment advisor.